You are listening to Charting Wealth for Thursday, the 4th of August, 2016. Thank you for being with us. We are continuing to explore, as we do every day, the exciting world of stock charts. Now, those of you new to the program might say, what is exciting about stock charts? Let me tell you, everything. Fear, greed, money, wealth, poverty, you name it, it is so much better than anything else you can do looking for ways to make money if you can learn to read these stock charts. And that's what we're all about. It is truly a road to riches. And we're an education firm. We're not a stock calling service. We're not giving you investment advice that's posted everywhere. What we're trying to do is to train you to be able to read stock charts like a roadmap and then be able to progress to incredible wealth, whether it's in the long term and or short term. You can be a trader in the short term or a long term investor. Now, there's a lot of people who say, wait a minute, I'm a value investor. I'm out there analyzing this and that. I don't need to read a stock chart. Let me tell you, that is a very foolish assumption you are making, that any valuable investment can be overpriced. You can walk on the lot of any car dealership and you can pay full sticker if you're foolish enough to do that. But my question is, why? If you can learn to read a stock chart, you can figure out when to get into an equity, an ETF, a stock, whatever it might be, and when to get out. Stock charts are the key. Now, let's jump right into what's going on. We always start with IYY. That is the iShares Dow Jones U.S. Total Market Index Fund. It tracks the whole stock market. What do we see going on our 2-day chart? Well, we have talked for many days, since about the 15th we've been watching this as the stock market has slid sideways. The stock market is still going sideways, down at this point. It was up technically for the day 0.34%, but it is still above where it started moving up on the 2-day candle all the way back on the 15th of July. We do see our 2-day trend line has been broken. We've had a kink over going down in our MACD, moving average convergence divergence indicator, on the 2-day candle ending on the 29th of July. And we have the blue MACD very rapidly approaching the signal line. We also have our derivative oscillator losing lots of speed. We have a spinning top from the candle ending on the 2nd of August, and for the candle that started forming on the 3rd of August that will be complete on the 4th of August, we have a solid red down candle with a wick below, no wick above. We had a spinning top on the 2nd. We now have what's forming to be a down candle. So we will wait until it's complete at the end of the day on the 4th, but it does appear that we've got a red down candle and we have a real kink over going down in our a converging of the signal line and the MACD, which when they cross, they mean that we're going to have movement in the opposite direction. In this case, it would be down. They've not crossed yet, so we're not calling it yet. We are still technically in an up move on the total market, but we are very wary about what's going on. What do we see on the 4-hour chart? We see some up movement in the morning and followed by up movement in the afternoon. The afternoon up movement was stronger. It is an open green candle. However, the derivative oscillator continued to gain downward momentum even though the price movement went up. How is that? Well, the oscillator is telling us things we need to pay attention to. The MACD and the signal line are still far apart. They got closer to crossing over back on the 1st, but they've continued to move down and far apart. So again, we're not seeing any up movement at this point. We have been waiting, hoping that the down movement that started occurring on the 19th of July, when our 4-hour chart first crossed over, was merely a pullback. And remember, a pullback is where you have lots of up movement on your big chart. Then you have a pullback that is some down movement, breathing space on your short chart, and then it resumes in the direction of the big chart, which in this case would be up. Sometimes that occurs. When it does, great jumping in point to make money on the up trade. The safest time to enter is when the short chart crosses back over, moving in the direction of the large chart. But when that doesn't happen, then it's not a pull back. It can be a pull down. So we'll continue to monitor and see what we see. If we do see a crossover going up, well, we're technically still in an up move on the total market. We would look to jump in, possibly, all things being equal. That typically is a good time to get in. But again, every single trade, every single investment we do has to be measured to itself. Okay, everything is individualized. We want to look at all of it before we call it as something that we would want to jump in to a virtual trade. And again, virtual. We're not calling anything for anyone. No one pays us for that. We don't do it. Okay, next we'll go back to our 2-day chart and we'll take a look at SPY and see if it differs a lot. It was up 0.29%. Again, remember, total market up 0.34%. We see the same kind of thing. We have a breach. We have a broken 2-day trend line. As far as our trend line goes on the 2-day chart, we also have the MACD and the signal line coming together. We have the derivative oscillator losing speed. That is, it's moving down. Now let's look at the 4-hour chart. Looks pretty much the same way. Is a lot of up movement on and a little bit of down movement on the final candle for the day. That down movement shows us that the bears were really trying to mess around with the charts at the end of the day, but primarily all the movement was up. Derivative oscillator continued to lose energy, and the MACD and signal line stayed apart and kept moving down. So again, let's just pay attention. We don't have a confirmed, that pullback could end up being a pull down. So we're now going to range back out to our 2-day chart. And last, we're going to take a look at the Qs, Q. Interesting development in the Qs. Since the 1st of July, the Qs has had nothing but green up candles. Unlike our other two indexes, the Qs has just been jamming up. Several points for you to jump in to that Qs movement and ride it up since it started. Let's see, we had the crossover. The high on the Qs was 111.34. The low when we had that crossover occur was 107.29. It has been as high as 118.78. Lots of jumping in points if you're using our Hikinashi candlesticks. But here's something concerning. For the first time, now again, the candle is not complete. It's the first day of a 2-day candle ending on the 3rd of August. Once we complete the market closes on the 4th, that candle will be complete and the market could turn around. But right now, we have a lot of indecision being shown. We have a red spinning top, or almost really a doji. In other words, we have the first potentially red candle since the market started moving up well over a month ago. That is a concern. Getting close to crossing over the 2-day trend line. Derivative oscillator is losing energy. That started on the 2nd of August. So again, in the last couple of days, we've started seeing some down movement. Now, if we look at our 4-hour chart, what do we see? Well, of course, those of you who will recall had a strong up movement on the 4-hour chart, half-day chart starting right around the same time that the market crossed over. The 1st of July is when the 2-day chart crossed over. 4-hour chart crossed over on around the 30th of June, and the market moved up. We had our first pullback right around the 19th, and there's plenty of you who jumped into virtual trades around the afternoon of the 20th. The high was 113. Of course, the market has moved up as high as 115.90. So some nice movement depending on when you might have jumped in. We had another pullback occur and then another crossover going up. Some of you jumped in around 115, 114 something. Well, We have seen a crossover going down. That occurred on the 2nd in the morning, the 2nd of August. But then over the course of the last day, the market recovered a little bit, at least the Nasdaq did. It was up 0.33% for the day. Again, still in a confirmed down move. Now, this is the third one that we've had since, this is 1, 2, 3, actually the fourth one we've had since the up movement occurred. At some point, it's not going to recover back, and that can be a real problem when you start seeing pullbacks and pullbacks and pullbacks. This is the first one, well, the second one we've had, but this is the first one we've had some major drops in the derivative oscillator. So you need to find a good exit point to take your profit and remove yourself potentially from the market. Some of you have sold half of your position and you're holding on, letting the rest of it ride in the market to see if it recovers back. Just be careful. Remember, we have a great teaching on how to set yourself up, email alerts rather than using stops. If you use a stop to get yourself out of the market, what does that do? The minute the stop is triggered, you're sold in a market order, which means the market maker can really put the screws to you. They can, what we call, raid the stops. That is, drop the price. All of a sudden, all the orders that were online now become market orders, and they can fill it at whatever price they decide to fill it at a certain time. So again, it just means that they have a lot more ability, particularly when the market's opening, to really put the screws to you. Yes, there are rules, but particularly when the market opens, those rules don't necessarily go in your favor. So again, be careful. It always stinks to have made a lot of money in the market and then lose it. That's why we always tell you to monitor prices with a good email or text alert. Then you can go in, assess things, make up your own mind. But again, this may recover. But after you've had so many ups and downs, again, we are in an election year. If you read your Stock Trader's Almanac for 2016, it tells you all about what an up year it is. So pay attention as we start entering into the fall-winter trading zone. Things can really get dangerous in the coming months. Remember the rules about when all stock market crashes have occurred. So pay attention, be nimble. Now, that is where we are on the cues. Lastly, we're going to range back out to our 2-day chart, and we're going to look at gold, which was down 0.48% for the day. Gold tried to cross over, but it just didn't make it. It tried. We've had 4 2-day up candles. Well, this last candle's only on 1 day of a 2-day up candle. So we have 7 days worth of up movement so far in gold as far as the 2-day candlesticks goes. Market was technically down today, did not cross over going up. Derivative oscillator still in the negative. Gold is trying to cross over, but is not in a confirmed up move at this point. Let's look at the 4-hour chart. Of course, it is in a confirmed up move, has not yet crossed over going down. So continue to watch gold. Don't have a signal there yet. Well, folks, that's where we are as the market drew to a close on Wednesday, the 3rd, as we go into Thursday, the 4th of August. We appreciate you being with us. If you appreciate what we do, we only ask a couple of things, and it's not money. We ask you to go to iTunes, subscribe to our podcast. We very much appreciate that. Give us a 5-star rating. Helps us with the metrics. Also, if you would please go to YouTube and subscribe to our channel. We are at 800 and something subscribers now. When we hit 1,000 subscribers, guess what? We can send those subscribers proprietary broadcasts. So even more information right to you will really help us out. If you appreciate what we do, we ask for just a little bit of reciprocity, and you guys are so good with it. Thank you so much. You have questions, problems, concerns, issues, you need more training, first check out what we have at Charting Wealth. Other things that aren't clear to you, let us hear from you. We'll try to put together more training. And guess what? We just posted on YouTube. I'm going to try to put it up also this evening at the website. We now have up not only Chapter 1, but Chapter 2 of Charting Wealth, the book. You will get so much out of it. We appreciate your help listening to it and making recommendations, but it's already up on YouTube. We're going to be posting it on iTunes, and we'll be posting it at the website. But thanks so much for all of your participation. Remember, 10 minutes a day, follow these charts. Make sure that you have copies of the PDF that we put out, the daily market review or your daily market worksheet. Follow along with us and fill that out as you go. Thank you so much. Let us hear from you at chartingwealth.com. God bless you in learning how to read these stock charts. They are your roadway, your pathway to wealth. God bless.